Subsequent to the year of acquisition, how to prepare a consolidation worksheet under the following three situations. A year after the acquisition of another company, the parent company has to select and apply an accounting method to see the relationship between the two companies for the internal record keeping. Due to the method that was chosen, the investment balance that was recorded by a parent changes over time. These changes will not affect figures that will be reported by the combined companies. However, it will affect the periodic consolidation process. If the parent uses the equity method, the equity method is very popular in the companies where the subsidiaries' profitability by using accrual-based income figures is measured by management periodically, for example, monthly or quarterly. The equity method creates a parallel between parents' investment accounts and changes in the underlying equity of the acquired company. Equity method is often called as a single consolidation. When the parent completes the ownership to create a total income figure that is reflective of the entire combined entity, equity method earnings from the subsidiary need to be combined with the parent's other income sources. Basically, the equity method is continually adjusted to reflect the current owner's equity of the acquired company for the investment account. Also, for the income account, the equity method earns the income accrued and recognizes amortization with other adjustments. In addition, the advantages of the equity method is that acquiring company totals give a true representation of consolidation figure. If the parent uses the initial value method, the parent uses the initial value method when the parent recognizes income from its share of any subsidiary dividends when declared. Initial value method frequently reflects cash basis for income recognition because little time typically elapses between dividend declaration and cash distribution. Because the investment account is eliminated in consolidation for the initial value method and the actual subsidiary revenues and expenses are eventually combined, firms may avoid the complexity of the equity method unless they need the specific information provided by the equity income measure for the internal decision making. A worksheet adjustment must be made to bring the parent's retained earnings balance to equal of that of the equity method. If the parent uses the partial equity method, when a parent company uses the partial equity method to account for an investment in a subsidiary, consolidation entry is needed to simulate the equity method for parents' retained earnings in deriving consolidated totals and update the parent's retained earnings for the past year's amortizations, acquisition date fair values. Under the partial equity method, subsidiary income does not increase the balance in the parent's investment account, and the balance in the investment account is not decreased by amortization on allocations made in the acquisition of the subsidiary. Would the consolidated total numbers be different if the parent uses the equity method, the initial value method, or the partial equity method? Total consolidated numbers will be the same regardless of the method the parent uses to account for the subsidiary. Much of the consolidation entries remain the same between the methods as well, with the only differences being the amount in the investment account, the income recognized by the subsidiary, and the parent's retained earnings. Despite these three differences, consolidated totals remain the same. When the parent uses the equity method, it will eliminate all reciprocal accounts, assign assign an amortized fair value allocation to the specific accounts, and record amortization for the current year. If the parent company uses the initial value method or the partial equity method, has no effect on the basic account. Each entry on those worksheets corresponds with the consolidation in which the parent used the equity method. The only difference with the equity method is that both on the parent records and with the consolidation entries are highlighted on each of the worksheets.